What's up, innovators? Today I'm sharing the top 3 ways I'm recession-proofing my real estate business so that you can apply it to your business as we're heading into some uncharted territory for many of you. I made it through the last crash in 2008, made a lot of mistakes, but learned from those mistakes to build a multi-million-dollar real estate business. And so my top 3 strategies I want to share is: number 1, stick to your model and do not compromise. Number 2, move fast. And number 3, find a mentor who's made it through a recession in the past successfully to help you get through this next recession. So let's get into the details on each one of these points, as it's super important for you to understand them so that you can start applying them today. So number 1, make offers based on your model and do not compromise. Let me get into the details on that. So let's just say you're a fix and flipper and you know your model, right? You have to hit that 70% rule, that ratio of 70% of the ARV between your acquisition price and your total rehab budget. Let's say someone has a house for sale at $500,000. You know the max you can be in that deal is $350,000. If the property needs $100,000 worth of work, offer $250,000. If it needs $50,000 worth of work, you can offer $300,000. Now, some folks might say this is crazy, it doesn't make sense, but the market's moving it's on a downward trend. And so as a result of that, you've got to make offers based on what works for you. It's going to take some time for the sellers to adjust their expectations, and you're actually doing these sellers a favor because a lot of them are still thinking pricing's what it is from last year because real estate data lags behind the market. Again, the data that they're looking at to come up with the values for their homes, for realtors, for sellers, and everyone in the market, we're all looking at past data. The market's moving faster at a different rate, but it's headed in the wrong direction. And so as a result of that, your lowball offers will protect you from the declines and also get these sellers to be more realistic. And if you do end up getting a deal, you can do the deal with confidence. This brings me to my second point. You've got to move fast. I recently bought a fix and flip that took me 4 weeks to do it. Typically, some of my flips have taken up to a year to get them done because they're extensive, they're full gut rehabs. I'm not doing gut rehabs right now because the market is just not the right time for that. Because again, we're declining. If I do a year-long project, what the market is today and what it looks like a year from now is gonna be very different. But if I do a 4-week project, I'm pretty safe. Real estate values don't decline that fast, especially when the fundamentals are sound for the market. And so as a result of that, I did this 4-week flip. I bought the property for $430,000. I put $50,000 into it, and I got an offer at $595,000. Now, when I bought it, my comp supported a value around $600,000, but I was hedging it down, so I listed it at $589,000 just to be safe. But again, we moved fast enough to where we were able to capture almost a $600,000 ARV we spec'd out from the beginning. So move fast. You got to move faster than the market. And then number 3 is find a mentor who's made it through a recession in the past and really just work with them, talk to them, make them your trusted advisor through these difficult times. Again, there's a lot of uncharted territory out there and a lot of nuance to real estate. Let's say you're a buy and hold investor. So for example, I just picked up a 2-family that I'm renting to a housing agency. So the money is coming, it's federally funded. So the money's coming from the federal government. And I was able to buy the property for about $900,000. You know, people say that's crazy for a 2-family, but because of the size of this 2-family, it was a 16-bedroom 2-family, bigger than most 3-families in this market or 3 units in the market. We were able to get $18,000 a month in rent from one of these federally funded groups to do a master lease on this property. So similar to like sober housing and those types of models where you get a huge return, a much larger return than you would renting to a traditional renter in these areas. And so that's one example of how we made an offer based on what we could afford for our model. Again, if whatever your model is, if you're a developer, same thing, you gotta factor in a decline. If you're a fix and flipper, factor in a decline and move fast. And if you're a buy and hold investor, know what numbers work for you for your ideal return on investment and make an offer based on that number. If you don't get the property, nothing is lost. If you get it, you know you've got a deal that's solid. And then the last point I want to make, this is the bonus round here, guys, is that let's say you buy a property today and the numbers work for you now, especially for buy and holds. If the rates go down, you can always refinance to capture those savings. But if rates stay where they are or go up, you're locked in at a place where you're getting the desired return on investment, which is a win-win no matter how you look at it, guys. I hope you find this helpful. If you look at the link below, I have some new programs I'm starting, mentorship and coaching and some different courses that were recently dropped. So click on the links below if you're looking to get mentorship through this challenging time, or come to one of my seminars or calls, and let's see if we can help you level up your business in 2023 and beyond, guys. Thanks for watching. Again, please feel free to like, subscribe, and share if you're benefiting from the content. And I'm looking forward to connecting with you soon. Stay tuned for more.
Visit rlncompanies.com to learn the game.